Yeah, this is obviously not showcasing our big account or something like that. Like with so much profits, whatever it is. Just trying to give you some hints. Probably you can take away. We have done maybe 7 out of 10 good things, 2 out of 10 bad things. I'll also tell you what all bad things we did and what good things we did, which will at least help you in not going against them. So things like if I dwell into my performance report, you tell. So at least you don't short on those days. If you don't like to be long, that's fine, but at least don't be short on this kind of day. So this is what it is from 1st of April. We started on 5th. This is futures and options. This was a bad day, which is HDFC Bank bad news. The learning from here is by 11 o'clock, I should have accepted that. It's my day. I kept on holding it. A small reversal or whatever. The thing there is, if Nifty opens with a gap down of 100 points, it's better to exit with a loss if you are long. There was a bad day, so there is some. Yeah, I didn't update the sheet, but that is a lesson from them. So this is various Nifty gap downs. Gap down size of, I think that day down 100 points. 24th. When was that?
5th May.
Okay, 5th May, right? Yeah, so 5th May was 100 points down. If you look at less than 100 points down, Nifty. That was on a Friday. Except in 21, 22. Every time it is not filling. I mean, the odds are very low, right? So 5 out of 3 filled, 7 out of 6. If you remove this, so that is going against 17 times since 2017. Only 7 were filled. Like a stupid playing to the gap fill. It never happened. So I was expecting 255 to hit. But all the thing is it went to 217. But it never went to 255. So lost pick. So the thing there is 100-point gap down. On especially on Friday, close your positions if you are in loss rather than fighting. Monday is 50-50 chance. Tuesday is change it here. 100 points, right? Yeah, these are some of the things you can do. Monday, there's no chance at all. If anytime a 100-point gap down happens on Monday morning, and if you are caught on wrong, or if you want to play for the gap fill, don't do it. 28/4. Tuesday, there's more than 50% chance. Wednesday, less than 50%. Thursday, 0 chance. like hardly 20% chance. Friday, no chance. Then I took all this tax P&L, basically, which gives you all the trades. You should be doing this analysis for your own. So maybe some more, but these are the minimum you should be having in your trading journal, just to reflect what is happening on a day-to-day basis. Even if there is no trade on day-to-day, you just put zero. And like it will obviously put zero, right? If there is no exits or entry. This is actually a very good thing. I was using only off margin to here. We had about 1 crore in the account. So build some capital before going full throttle. So here I was just probably I would have utilized 20 lakhs, even though I had 1 crore. Then we added this account is 1 crore on 15 days, and then 2 crores on 19 trading days, 3 crores, then 4 crores. Right now it is about 4.5 crores for last 16 days. 59 trading days, average capital is around this much, 263 lakhs. And this is your day-to-day P&L. Percentage, how your 100 fared. Then how 100 in Nifty fares. This is Nifty. So we were like 142 as of now. Nifty is 110. Nifty 100 would have become 110. So basically we're like 4 times aggressive than Nifty, but not 4x leveraged. Probably we would have been leveraging 2.5 to 3 times. The thing is, most of our profits have come in calls. You can see. So here, this is the overall profits. Some number like 107. Ignore the stocks, out of which calls have become 36 and puts are 70%. 68, right? So don't short calls unnecessarily, unless otherwise you exactly at least 60-70% sure that the market is going to. The only thing that happens most of the times is when Friday is down, you can take a chance. But again, that is going against the overall market trend. Most of your problems comes from shorting the calls. So we are like making money in long calls most of the time. We also shorted calls and we lost quite a bit. So this. Yeah, this was like half the thing was shorting calls. And day before yesterday also, I was so sure that market doesn't rally 100 points. So we shorted calls and we bought. And that pattern was like 95% win rate. You short on Wednesday 100 point away Nifty call, you'll make money. You'll make money almost 48 or 50 times. Only 2 times you lose. This is another that instance. Otherwise, we would have made a little more money here. So then look at this. What is the beta you are running? So this number should be less than 1.2 for an active trade. 1.76 is dangerously high. Anything above 1.5 is dangerously high, because when the market turns around, you will also lose 1.5 times than Nifty. That's what it means. In my case, it's 1.76 times. The trick that I want to avoid the Nifty wrap whenever Nifty goes into downtrend. whatever, is couple of things. One is Nifty posting a big down day. I would stay out. Nifty hasn't posted a big down day in these 60 days. And Nifty going into posting in a 20-day low cycle. 20-day low. I would be very careful and I would come out of Nifty positions if Nifty hits a 20-day low. So Bank Nifty has hit 20-day low around this time, somewhere here. And it recovered and went to, somewhere here. And it went and recovered and gone to 20-day high. So I was a little careful here in these 10 days when Bank Nifty was in 20-day low cycle. Basically, 20-day low cycle is nothing but if Bank Nifty closes at 20-day low, stay out of the market. Or Nifty, whatever is your main instrument. June was pretty good. Probably next June, I don't know whether it will repeat the same thing. 40% of, not 40, maybe 30% of our profits would have come from this. This one. Just do a plus or minus 500 triangle in June, you'll make some money. You'll make approximately this much, 30 points per day. With some losers. It's not that every time you win. But this time, this June also was more or less in line with this performance. 31 average points, max loss is 400. In fact, in this June, only Bank Nifty troubled, would have troubled you twice or maybe thrice when it went past minus 500 points. So otherwise, it was always within the plus or minus 500 points range. The first 10 days, actually, Bank Nifty was not moving at all. So you would be just simply collecting the strangle premium. And good thing is, we haven't exploited it fully, but yeah, don't overdo it. I mean, even if you're overdoing it, it's on your own risk. This Fin Nifty is very easy to play. Tuesday is very bullish. So all our Fin Nifty profits are from shorting puts on Tuesdays. This much. We lost big in calls because we didn't calculate the dividend properly. Both HDFC and HDFC Bank went ex-dividend. I was bullish on Tuesday. I lost one because the dividend adjustment came in and the Fin Nifty didn't move on that day. One thing with Fin Nifty is do not short on Tuesday. I mean, do not be bearish. It's uber bullish on Tuesday for some reason. If you are shorting calls on Tuesday on Fin Nifty, my prayers are with you because every day it's not that you will make money by buying the calls, but you will use money by shorting the calls. It just runs up 100 points in the last 1 hour or half an hour sometimes. So do not be short on calls on Fin Nifty post 1:30 on Tuesday. And in fact, if you put 1:2 ratio spread like that is short at the money call 1 and sell 2 calls, the next strike, next 50 points away. It will be 0 cost. In fact, sometimes you might get credit also. But yeah, most of the times it will be 0 cost or it may be 5 points from your pocket. You will win more than 40% of the times. If you win, you will win very big. Your loss is only pinning risk. Pinning is like, suppose you short 20,000 strike, long 20,050. Market goes and settles at 20,050. So you are bought twice, 2 bought calls won't be in profit. But that loss is minimal, like 3,000 or Not even 3,000, maybe 1,500, 2,000 per contract. But if you make money, you will win quite big. Last Tuesday, when Nifty rallied almost 200 or 150 points, you would have made like at least 4x or 5x of your money. Per contract, somewhere around 60 to 70 points. And with that came with a zero cost because you didn't put any money from your pocket. That's a Nifty lesson. Cap is bullish on buy calls on Monday. Try to sell them on Tuesday morning. You'll make some money. We made this much. Like with this is like 1 or 2 contracts. And shorted some puts. So that was this money. It's just like only 1 week. Cap Nifty. Stocks, nobody makes money. At least I haven't made money. So this is waste of capital, waste of time. This is what you make in 1 day in Nifty shorting puts on Tuesday. This is like whole 60 days. I made so many trades and I made only 2 lakhs. A beating in L&T on results day. And Adani Enterprises shorting a strategy, both Adani and Adani Ports. There was little fluke money made on Dr. Reddy's. The pattern here is it rallies in June. So you keep buying calls. I think we started at 4,600 call, kept on rolling all the way to 5,200. 5,200 didn't work out. But anyway, your last leg won't work out when you are just moving up. Buy calls as and when it moves 100 points. Because Dr. Reddy is a stock of 5,000 base. You keep moving up. No chaining up. Just bought like 5 calls or 10 calls. Kept going up. That's where this is like a fluke profits compared to this L&T. Don't short Indiabank in last 5 days. This is what we made in calls. See, this is just calls. And we would have bought like 2-3 contracts, not even big. You can ask anything.
Correct, you can show that PPT, just take it once.
I emailed you, Kura.
This is another easy pattern. So let the slides. So Nifty, you short the highest open interest strike. The expiry day, that is on Monday. And let it expire. It was always a winner. But be careful that you get at least a more than 20 rupees premium. Not like 1 rupees. This is like dangerous. Shorting a 4 rupee put, thinking it will go to 0. If it turns violent, you will end up like this. I don't mind losing if I short at 60, if it settles at 130, I don't mind losing that 60. But this is criminal. Even though the same loss, like here, if the loss was 100 points, I won't mind on 21st March. But this is criminal, like it's neither here nor there. Like, shorting a 10 rupee put and 27. Yeah, make sure you'll get like more than 20 points and then you can short. This has the highest you will get. I don't know when the tables will turn, but we discovered somewhere here this pattern. So we are trying this. In fact, we chickened out on 19 June when market gapped down and our short put was 25, it was showing at 80. Then we tried a limit order at 30 and we came out. Actually, it went to 0. So you can try this. Yeah, so this is the slide. Just this is the equity curve. This is that HDFC Bank day, and this is that recent shorting calls experience. We are doing okay with Nifty. Like Nifty is 40 days up, we are up 43 days. And this is the time to make money because Nifty is in 20-day high side. Till you see a month low or something like that, you'll be uber bullish, you'll make money. I mean, not all days, like this one. This is a good date. I expect anything above 60 is a very good percentage win in a day trading. Not day trading, short-term trading. This is our day-wise P&L. So quite a bit of our profits have come on Monday. I think some of you guys know that I go long when Friday is up, Monday is up. So 45% of the profits have come on Monday. Tuesday, why?
In Nifty.
This is 60% of it is from Nifty. Wednesday is so and so. Thursday we tend to lose because we close all our hedges. Most of the time we do diagonal instead of doing vertical. So Thursday will always be loss. Friday is my weak day, but still I tend to make some 14% profit. Friday, the thing is morning market goes up. If at all it has to go up, and then people start taking profit. So unless otherwise you are attentive before 11 o'clock, you tend to give up your gains. So that is my experience in the last 5 or 8 years. This is only 60 days of history, 3 months. So this is not a correct picture. I expect this also to be negative. This and this. This is your instrument wise. So mid cap we just started 1 week. Play on the risky asset, which is Bank Nifty. So you make more money. The second risky asset is Nifty. Nifty is mostly overall market. Stocks, you don't make money. I mean, at least I don't make money. Especially in stock options and futures. So I just made 2.5%. For this, I would have put 50% of my time. Like every day I have to do research, buy 1 or 2 calls, right? So it's not worth it. Yeah, but I'm just doing it because nothing else to do. This one is your Nifty versus portfolio. You put Nifty on x-axis, y-axis is your portfolio. This is your beta, y equals to 1.7x beta. So if market moves up by 1%, I tend to make 1.7 plus 2%. This has to be very low. If R square is, sorry?
They were not on mute, Cora. I just muted.
Yeah, if your R square is anything, R square is basically correlation of daily returns of Nifty, daily returns of portfolio. If it's highly correlated, what it means is you are dependent on Nifty. If Nifty goes up, you go up. If Nifty goes down, you go down. You need to be very low correlated. I don't have a number, but correlation square, which is R square, this has to be less than 40 if you are actively trading. If this number is above 80.8, right, then you are at the mercy of Nifty. So try to get it below 40 or 50. At least you are not at the mercy of Nifty. Any questions? Yeah, you can ask.
Kora, this is Hitesh here. So super
Yeah.
performance, congratulations. Kora, I just wanted to ask, when 20th cycle is on, what is the best way to trade it? I mean, should we buy calls, buy futures, short puts? What would be your suggestion? How to capture the return when 20th cycle is on?
I haven't fully exploited, but yeah, buy calls. See this. Most of this would have been from buying calls. You can translate that to 1 crore. So by looking at that number, it's number, right? So that is my performance, 40% just by buying calls. And I wouldn't have bought calls fully. What I mean by I wouldn't have bought calls fully is you can take a risk at a, this is not a an account where I can take a lot of risk. See, and this is my positions. You won't believe, right? Like it's 5.5 crores position, just 20 lines. Delete this. Delete this. This is a market-wide hedge. I can sleep for 2 quarters. I bought September puts so that I can use as a diagonals. So delete this. This I need to add one more short put. This is a market-wide. In the sense, it has to be minus 3,600. Another one line like this. So I'm betting if market goes below 17,000, I'll be safe. I should be safe because that's the next 10% down. 19,000 into 10% is 2,000 points down. I'm like trying to finance that same by shorting 18,000 put and 17,000 buy put. This is like 1:2 ratio. It will be in a loss like this, or it will come to no loss, no gain at the end of. See, when I initiated, it's 240 and it is 130. So I didn't pay much from my pocket. Right, so zero cost, right? 120 ideally. So I paid like 15 rupees extra from my pocket. Now, if you want to do, you will get it at zero cost. 19 to 2 is 180. In fact, for shorting, you'll get 189 and buying 90. So it's a zero cost. And you can sleep well. If market opens down with a 5% gap down or whatever, right? So this will lose, whereas this will skyrocket. Because the fear comes, everybody starts going to 17,000 or whatever. The moment Nifty touches 18,200, people say, all your analysts, right? Below 18,000, 17,000 is possible. Below 17,000, 15,000 is possible. So they start running to this strike. So delete this. Coming back to your question, right? I'm not overly aggressive here. No, this is some 1:2 calls spread. Because I'm not comfortable. I'm also not believing this rally. So I shorted 250 call. I bought 3,000 call with the same money. Okay, to answer your question, I am not aggressive, right? See, this is the premium I got. How much calls I bought? Not even 20%, right? Just check how much premium I got by shorting. Into -1 into this. So I shorted, I have a premium worth of 22.73. I should have spent at least 40% of it, whereas I spent only 100 here. This is 103, right? This is a short P and long C. So this ratio can be aggressive. It's like, now what is the ratio there? %37, yeah, about 40%. This 40% should have been maintained in Nifty and Bank Nifty. So Bank Nifty, see, I barely have 900. I should have had somewhere around 2,700. I'm not also aggressive. Yeah, you can be aggressive in 20-day high cycle. Look this long C around 40%. In Nifty, Bank Nifty and Fin Nifty.
So to understand, really you're saying that when 20th cycle is on, short put and long call in this 40% ratio. So you should do well.
Mm.
And these are all weekly for T plus.
No, calls should be monthly because Fin Nifty you don't have weeklies. Sorry, monthlies. I've gone to weeklies, but for Nifty and Bank Nifty you should be going on monthly. So this is month end. You have time.
Short should be weekly.
Yeah, short should be weekly. Short. And because it's a diagonal, I bought it July end 42,000. Because if you do vertical versus diagonal, there is a 1 point advantage. Diagonal fares better than vertical put spread by a factor of 1 point, one or 2 points sometimes, but definitely 1 point. And also my charges won't be there. You see, this when will I book? I'll book at July end and it will go to 0. Whereas if I do vertical, I have to keep booking every time. Every week I have to do that. So there will be a lot of brokers, transaction charges. Fortunately, Fin Nifty doesn't provide you monthly, so you have to go by weeklies. So in Fin Nifty case, it will always be vertical. But Bank Nifty and Nifty, you can do diagonal. In case of Nifty, you can do diagonal even up to September. That's what I had some September positions, right? Like, why do you want to pay your spread cost every month, every day, every week, every month? You can do once in a quarter. Also, the stupid Jiroda guy doesn't let you buy puts. I mean, basically the spread. You go and fake him by buying in September. He won't allow you for July now, but he will allow you in September. So.
Hi, Cora. Good evening. Just to add to this question. So,
This for Vikram question, I think I answered. I don't do verticals because the advantage between vertical and diagonal is almost a point. A vertical, let's say if vertical gives you average profit of 20 points, diagonal for the same thing will give you 21 to 22. Provided market doesn't shoot off. If market shoots off, then you'll be regretting the diagonal because your spread length increases and you won't be getting too much margin benefit. So you want your spread to be around 1,000 to 1,500 points in Bank Nifty. In Nifty, it is around 500 to 700. But if market shoots up, again, you have to create one more spread length, but diagonal like this. Again, but market doesn't shoot up just like that. So you will fare well in diagonal over a period of time. I mean, don't expect the results to be within a month after you switch over to from verticals to diagonal or whatever it is.
Sure, Cora. Cora, do you also roll them forward? Let's say if they
Sorry?
get, if the market move has a wild move or something, then what do you?
Then yeah, you basically you are under pressure of see, this one is fine. The length, sorry, the wing size, whatever you call spread size is 700, and the other spread is 1500, 1700, right? Yeah, this is actually widely moved already. 42,000, 44 to minus 42. Fine. I regret no, but that also will give you your leverage problem. Maybe if you put 1000 point spread, it's very aggressive. If you put 1500 points, it's medium. If you put 2000 points, it's somewhat safe in terms of leverage you're employing. So I will view like that. Yeah, the spread is, no, this is 42.5, right? Yeah, this is like a wider diagonal spread or vertical, whatever, which will block your margin. I prefer it to be around 1000 to 1500 points for Bank Nifty, for Nifty 500 to 700 points. So if it moves now, if this becomes 2.5, I have to take this loss and move to somewhere else. I'll move it to 43 put, this one. And basically, I don't want to pay too much for my hedge in terms of transaction costs. And also your, this is your cost of doing the business for this month, right? You would have made, you will make that much money if market is in little uptrend in Bank Nifty. Already made for tomorrow, I'm already sitting on this much profit, right? Sorry, this much. So the 10% is covered for one day. I have another, how many days? Another 20 trading days in July. So each day 10%, 10%, 10%. It's already gone to zero. Almost zero, 66. Yeah, so there's somebody else was asking it.
Yeah, hi Cora, I am Abhilash. Thank you for your session, but I just have a small question, Cora. Like, if you are bullish in 20 days high cycle, so there are many ways to do this bullishness, right? One is either you buy a naked calls, or you short naked puts, or you go on call spread. So which would be best way to capture these points, Cora? Thank you.
See, it's a mild bullish average. I prefer, I mean, the outcome, I don't know the outcome of how bullish the market is going to be tomorrow. Here, I would have preferred a short PE. This is just long C. In fact, you can do long CE weekly also. But this is very, very aggressive prediction. This would be like 100, above 100 points gap up. If you can predict, you do this. You can do even weekly also. If you know that Nifty is only going to go up by 30 odd points, 30 plus or minus, like 25 to 40, you do this. Average is anything above 50 points, but below 100 points. There, do this combination. Plus somewhere like 25% at least. See, I mean, invest that premium, what you want, 25% into buying calls, monthly calls. Here, what you can do is you can do even ratio spread also. That is short at the money. And buy 2 ATM plus 100 or 50, whatever it is. Tons of money to get. Basically, I'm also looking at financing. Whenever I want to buy long calls, right? I don't want to put from my pocket. I want it to finance. The way to finance is either short put or short call. That is what I have done here. I became over bullish because it's turn of the month. So I would have started a short call and probably 19,100 call I would have bought. Kept on rolling, and now I went to 19,300. Yeah, you can do this if you are very uber bullish. I was uber bullish 2 days ago, but Friday I was nervous. Monday I will be more nervous. I mean, if you're not taking if you are entering here and thinking breakout and all this stuff, it's a last set of people who are coming in. That's what I'm thinking. Unless otherwise, the results starts pouring in and extremely good quarterly results. That's another 15 days away. So I'll revisit after tomorrow gap up. Looks like tomorrow there is a gap up of 70 or 80 points. I will stop being this one from tomorrow. Maybe move to this. I'm always bullish for only those 3 conditions. Yeah, after Monday, I'll probably go here.
Yeah, Kora, thank you so much, Kora. It was clear explanation. And Kora, just to add one more question, like turn of the month, suppose you take before 5 days, and suppose if it is not triggering, so what would what should a fresher like guy should do, beginner like guy should do? Do we want to add up more calls, or should he?
So last 3 months it worked, but I don't know. It works only 5 out of 12 times, and 3 times you will break even via this short put, losing this second bet. 4 to 5 out of 12 months, it will be like this. 2-3 months, it will be like this. And another 2-3 months, it's not mild, it will become bearish also. You'll lose. But yeah, that's a part of the game. We can't help it. So if you look here, these are the dates I should put, right? I think this will answer Sagar Parikh's question also. So week wise, right? This is last day of the month. Zero, else plus down. I'll put 1 on it. So turn of the month is this one, right? Should be doing some, I should be doing geo mean, whatever it is. That's the money I need. 18% is what it's showing, so I don't make like at least 20%. It's that powerful. It's that powerful, but it worked also. So basically Nifty also has to bless you. These are the turn of the month trades. Yeah, if I was only playing on that day, your 100 would have become. This is just 3 months, right? Yeah, I told you, no, 20% I made just on those 4 days. So the lesson here is don't short. I haven't lost any big thing. I just lost on only 1 day, which is a significant loss. Yeah, only this day. These are like scratches you can see. And I made a big profit on that day. 3 big profits or 2 big profits in this month.
So Cora, how are you trading this TOTM? A shorting put, a buying call, or
Everything like this only. This one.
average? Okay. So 40% would be fine, right? How you explained to me, the 40% would be a good ratio.
Start with 25. And then if you start making money on the calls, then you increase. Straight away, if you start with 40-50%, if you lose money, you'll start blaming me, right? Like this. Any other questions?
Thank you, Kora. It was great explanation. Thank you so much.
One question came in the chat from Vikram.
Yeah, there are some questions. I'll just read. Bala. Do you track Wix? If yes, how does that in farming wise? I don't track Wix. The thing what I do is this one, right? So you calculate log change. That is log of today's close by yesterday's close. Then you take standard deviation of that log chain AC for 20 days. That becomes your 20-day realized volatility. And 250 days. That is long-term realized volatility. And if that number is less than 100, and that means short-term volatility is less than long-term realized volatility. You be bullish. Bullish in the sense, what is the strike that you want to short here? Put. Market closed at 18,970. Asking you that question. Now,
Vikram, you can answer.
Sorry, Cora, I did not follow. I could not follow all of that. Sorry.
yeah, so the market closed at 18,972 that day. This one, right? What put leg you would be shorting?
Around 19,000.
That's too aggressive.
Because I typically do buying only, so I'm not really. I never sell.
Okay, so what call leg you would buy there?
Yes, number 19,000 or so.
That again, you'll be under pressure. So you should be buying 18,000, one leg lower, probably 18,800 or 18,900 month-end call. So if I want to short, I would probably short 18,800 put. That is the safest put. Or 19,000 if I'm very, very aggressive. And that aggressiveness will come only on Friday and Monday and not on other days. So basically mark this low volatility zone. In the high volatility zone, basically I would be out of the market. So the thing here is, this is 20 years data. Nifty has made 17,000 points in this 20 years. Now, set this to low vol zone, that is less than 100. Your entire money came in that zone. And this stays for 5,000 odd. Now that is reduced to 3,300. So when the market is in high volatility zone, that time your VIX also will be going above 15 or 18 these days. So this is 3,300 days, you remember. And get entering into high volatility zone. That is, last 20 days realized volatility is higher than last 250 days realized volatility. You don't make any money, right? 200 points, 300 points on 1,500 days. So you rather stay out. So this zone, which corresponds to your VIX of greater than 16 or 18, stay out, because I know that I am not making money historically. So the same thing will happen in future also. So you are basically lucky from last July. I think this is when our Watanabe show also was catching attention. We started in March 22. Did okay in front of live, coming every day and trading the 200K account. So that's when our bottom is made at 16,000. And today we are talking about 19,000. That is because your low volatility regime. That's why we are making money, both in 200K show and in whatever the money I'm managing or I'm trading on my personal. It is not your trading skill. You have to accept that. Even I have to accept that. It's not my trading skill. It is because Nifty is in my comfort zone.
Got it. Thanks for that, Cora. Cora, the formula that you derived for high wall zone versus low wall zone, like, is that something proprietary, or I can read
It's
about
not
it?
proprietary. It's very simple. The big sheet. Just downloading for 2 years. Just doing in front of you. So you will know. We need to wind up in max 10-15 minutes. So July 20, January 1st. I'll see if I can upload in Watanabe or somewhere. First step is log change. And that is today by yesterday. Then standard historical realized on 20 days. 20 days is month. It's 20 numbers. Then this 250. 250 is year. This you want 250 days minimum. So you don't want to calculate this for last 1 year. 50, 70, 80, 100, 7, 254. Okay, I can only do up to here. Now do this, either formula or make it. If this is less than this, it's a lower. This higher. Try do ratio. 100 divided by 100. So it is greater than 100. Sorry, what is this? I didn't do that. Somebody drawn. Yeah, this is the formula. So I'll upload it. What happened to this first thing?
Sure. Thanks for that, Cora. And does this follow
Drawn
with
this swastik. I don't know. Sir.
Koda, I have not drawn.
Yeah, sorry.
yeah,
This is
yeah,
I'll
Cora. So,
upload.
does this follow Wix or prepone Wix? How does this like which one is lagging?
Wix is actually forward looking. This is lagging. This is what happened in the past.
Got it. Sure.
Wix is a bit forward looking. Basically, Wix this doesn't know when the elections are, right? Whatever I've taken. But Wix knows when the elections are.
Got it. Thank
Cora,
you.
sorry, just one quick question. The short put weekly plus 25% long call monthly, both these are at the money or plus minus 100?
Do weekly short put at minus 100 strike in Nifty, Bank Nifty, maybe minus 200. Long call should always be in the money. For Nifty, minus 100. For Bank Nifty, minus 500. Because Bank Nifty doesn't trade that often, that much in 100 strikes. But yeah, I mean, if you are sure of going and in and out in Bank Nifty, yes, you can do minus 100 strike.
Okay, thanks.
There was one more question, so where is the chat? When to stop a trading strategy? This is like little bullshit answer because there's no proven literature around this. But I follow this tedious process. I'll explain. Where are my returns? Okay, somebody is drawing. I don't know who is this. Priyanka, are you scribbling or?
No, Cora, I wouldn't do that. I don't know
I don't
why
know.
I do that.
Somebody has taken a marker and drawing that.
Okay. Oh, that option is there now on Zoom. Correct. Yes.
Yeah. So the black and swastika. Okay, where is my returns? Yeah, so this is my returns, right? This is answer to when do you stop. Assume this is only one trading strategy which I am following. So this is what my trading equity curve. Now I require a lower Bollinger band for this. Lower Bollinger band, you at least require 20 points. So you come here. There you come here. So this is average of my stock price, or in this case, my equity curve. and a standard deviation of that particular returns, or my stock price, or my equity curve, right? So my lower Bollinger Band is this minus twice into this. Now do that. This is my LBB, right? My equity curve, has it ever gone below lower Bollinger Band? It has never gone below, so I can continue. The moment it goes below lower Bollinger Band, you please stop the trading strategy for a while, for a month or two. Only do paper trading with the same trading strategy, and you come back. You won't miss anything. I mean, you may miss some result, you may miss some profits, you may miss some losses also, but take a break when equity trading curve and lower Bollinger Band on that, and your equity trading curve goes below lower Bollinger Band. The same is applicable for upper Bollinger Band. That means you are taking too much risk. I would have gone maybe on upper Bollinger Band once or twice, and immediately I would have hit with some drawdown. I will show you.
For just a second, I'll just clear everything. Screen share will go for 1 minute. Okay, share the screen again. Hopefully it is gone.
Yeah. So this is my upper Bollinger Band. I gone upper Bollinger Band. Immediately I would have been whacked. You can see that. So that is where I have gone upper Bollinger Band. Immediately I gone whacked. See, I have gone here, right? So I was hit with 6% down that day. That means I was aggressively going above. But that's just a one data point. Let's see if you can also say unlucky with HDFC. Again, I've gone here and I got a whack. I won't be trading, stopping trading strategy here, but I should be careful in leverage when I go upper Bollinger Band. And that's what happened. 2 times I got hit. This time lucky to be hit. Maybe I'll get hit in the next 1 or 2 days. Like I'm now gone upper Bollinger Band. Yeah, stop your trading strategy when you go below lower Bollinger Band. And there's no literature around it. I cannot prove also. But once I hit, but in my case, I can never prove because I'll be trading multiple trading strategies. But yeah, you have to draw a graph like this. So take a break of your equity curve going below lower Bollinger Band and then revisit. Last question, sorry, previous there was one question called
How to keep tab of so many ideas.
sorry, what is that? Some troll, that is.
Yeah, Kura, it was somebody.
That same German guy.
Yeah, I removed him from the Zoom session.
How do you keep a tab of so many ideas? Just do research. So this is actually this one, right? We did it very judiciously. So every day you keep revisiting, and whatever you like, keep backtesting or keep writing in a white paper. So out of 200 good ideas, at least you remember 30 or 40 in your head. Yeah, actually, so we do mostly research during the market hours. I'm not bothered too much about this, what it is guided. Only in the morning, 9:45, I'll bother. And later on, I keep checking only once in an hour or once in 2 hours. Unlike you see the photos of traders, right? Always hooked on it. I'm never hooked on it. Most of the time, I'll be doing this. So you get in a month, even if you get like 2 new ideas, you are done. Like your library keeps adding up. Good source, actually. So look here, all these guys. And read. So I would definitely, I mean, I'm not keeping a tab on all these guys now. Where is Rapahana? This is a good source. So read this. These are like tons of material. See, like so many blog posts. You'll get some ideas by mash up.
Cora, one request, your next training session, if you can have a physical session, maybe Goa, wherever. I know 3-4 people who would like to come, like a 7-8 day session where we can sit with you and understand this in detail rather than an online training session like we've done.
Arvind, this is across the markets. See, you take some theory. Because Indian guys, I don't see writing with really effort. Thing is, it's not viable business. Blogging and charging for it or whatever. Yeah, the thing is, some of the ideas may not work in Indian markets, but you will figure out after you start testing on your own. I do that here, but again, I was also not regular. Some I keep it free, some I put it behind the firewall. But the thing is, I'm also not regular. So why I'm not regular is this takes a lot of effort. Then if the trade idea doesn't work, I'm not actually blaming Indians. Our guys are more trolling in nature. If it doesn't work, if this idea didn't work, right? On April 1st, again, you will troll. Whereas here, they won't troll. This guy is just going on and on. If it doesn't work, he will say, I told you there will be a losing trades also. It has come into that losing trade segment. That's the thing. So yeah, so my frequency is like once in a month. Sorry, twice in a month. And quite a bit of them are little advertisements. Yeah, so this was like, this is what I mean by regularity. Like you should write something like this at least once or twice in a week. There's no incentive to do that. So that's the reason I stopped. See, like September at least, we had like 4 or 5 ideas, right? Another point, after writing, what happens is it becomes repetitive. I don't want to write this again and again. Then it becomes a trading alert service. Then you have a silly problem. So once I write it, I can't keep rewriting. That's the problem. Yeah, but this is a good source. You'll get some ideas. Like the thing is, you will flip also, right? Like this is your Fed day. You flip it to RBI day, and you also say what does Fed day looks like in Indian market. Now immediately your Fed day will be replaced by our RBI day, right? So that's the idea of flipping. At least that guy is telling you to look into Fed days. I don't know what is CBI. This is proprietary, so forget it. Yeah, forget this. You at least have an idea here, right? Nifty closes at 20-day low and less than 200-day moving average. What does happen? And you will also flip this 200-day, 20-day high greater than 200-day moving average, less than 200-day moving average. So by just looking at this statement, you have 4 ideas. And if something works, you will remember. Or you will take it to further study. If you don't have any questions, we'll wind up and I will try to upload this somewhere.
Yes, Cora, I think we answered everything. I think question he
Yeah,
said,
that physical session is impossible. Even online session also, trading session also, I'm thinking to take 1 week off or 10 days off. Maybe around next year start.
Sure, Cora. Look forward.
yeah,
Because
guys,
we have a lot of pending things from our company perspective. What now we taking 10 days off. It's like not possible, at least next 3 months. Thanks, guys. So if you don't have any questions, we'll wind up.
one last thing before you guys move. Guys, we are having a physical live trading session 6th of July in Bangalore. If you're there in Bangalore, please do visit us. I will leave all the link to buy the ticket in the description in either in our Twitter account or in YouTube. So yeah, please do consider coming and meeting us. After the event, we have a little get together for dinner also, dinner and drinks. So you can meet Cora there also. Yeah, if you guys are in Bangalore, 6th, that is coming up Thursday, please do come and meet us in Bangalore. Thank you all for joining in. Cora will wind up.
Yes, we'll wind up. Thanks. Thanks for your time, guys.
Thank you guys, everybody. Bye-bye.